individual stock. So for that, first we need to identify the direction. So when we look into Exide Industries here, from 579, it came down to 335. Using VWAP levels, I created the Fibonacci levels, and currently it was testing the 23%, and now there is a sign of it going up. And if you look at the MACD zones here, it is also indicating a positive up move. So in my expectation is that if 392 gets broken, then the stock can move up to 425 or 450 levels. But in case if the market, if it doesn't break this level, it can also come down. Now, assuming that I want to take a long position on Exide industry, the easiest way for me would be to go for a bull call spread. So I will call it as a debit spread. Debit spread means you will have a lower premium collection versus the higher premium payment. Let me break it down for you. So here, what I can do, I can go here and click add watch, sorry, create group, and then search for the stock. Okay, so here I would be searching Exide. Now I would be deploying this strategy in the month of June. I would be selecting the June series. So here what I would do is I would buy 390 call. Okay. Now if you buy a 390 call, the premium would be around 15 rupees 50 paise. That would be your loss, max loss if the market doesn't go up. Now, in order to reduce this risk, what I would do is I would see an option where there is a decent open interest. So I see that there is a decent open interest around 430 levels and 420 levels. So 425, I don't see much open interest, though that is our resistance area. So what I can do here is that I can choose 420, which has got 1.65 lakh open interest. Now, these are the actual data a trader would require because everyone will tell you that buy a call of a lower strike and sell a call of a higher strike. But all stocks will not have a high level of liquidity. So that is why you need to see the open interest and then make a decision. So here what I would do is I would basically sell this and click on confirm. Now you can see here that I will be losing maximum 8 rupees 30 paise. My max loss will be 8 rupees 30 paise into the lot size. So if because options are traded in one lots, uh, so my max loss will be 8 rupees 30 paise. Now, for every 1 rupee increase in the Exide share price, this strategy would give me 22 paisa gain per unit. Time will work against me because if the price of Exide doesn't go up before 26th June, then I would be losing 3 paisa. Again, remember this is not constant because theta gets impacted from multiple factors. Now, if the volatility in the stock increases, then the premium of the 390 call would increase at a higher rate when compared to 420 call. As a result, due to the volatility, the jump in the 390 call premium will be higher when compared to 420. So I have a positive vega of zero point 0.9. So currently I have to pay 15 rupees 50 paise and I will be collecting 7.2. The net premium is 8.3. Now, if I want to execute this, I just click on trade. It shows me the lot size. So lot size here is around 1800 and the margin required is around 39,000. Currently, there is a 6,90,000 margin in my TradeGenie account. In TradeGenie, you can give stocks as a collateral, cash as a collateral. So by giving cash and stock, I have a margin availability of 6,90,000. Now you can see I have a choice to execute using market order. That means irrespective whatever is the premium, it will get executed. Or else I can use execute at the last traded price and then I can just execute it, which would be again a limit based order. Okay. So I can execute at market, I can execute at LTP, last traded price, or I can execute it at a limit order. And also you can attach normal order and intraday. Intraday, the end of the day, you have to reverse the position. Also, you can see the charges here. So I have to pay a brokerage of 40 rupees. And this is for the 1 lakh transaction, like 20 for this order and 20 for this order. And SEBI charges should be around 21 rupees. So the total charges should be around 92 rupees 60 paise. So this is for the trade genie. So this is the order part. Now, okay. So if I want to execute this, before I execute, if I want to analyze it, I can go to strategy builder and see the when will I start incurring a loss on this. So the range for me is the stock has to break 398 because I am paying 8 rupees here. 15 I gained on 15 I paid on 4 390 call and I collected 7 on 420 call. I would be having a net outflow of premium of 8 rupees. So 390 plus 8, 398 will be my break even point. So if the stock goes from 398 to 425, I make 37,260 as a gain. 37,000. Again, you can test it based on the time. Like, for example, if I wait till 26th June, my max gain will be 39,000. But what if the price goes up before 10th June? Let's say the price goes to 425. So obviously, this 390 premium will increase due to delta factor and due to theta decay, it may slightly reduce. So typically in options, typically in options, the premium increases due to when you buy a call, the premium increases due to delta and it slightly reduces due to theta. Okay. So here, if the price increases from the current level to let's say 420, so the delta will work in my favor and theta due to theta factor, it will slightly reduce. Meanwhile, the 420 call, which I am short, a short call, now that will also increase due to the delta factor and it will slightly reduce due to theta. So the net premium, what you see in the market, it's a function of delta, theta, and vega. So we will touch into option Greeks in the upcoming video. But here, this would increase for me, which would be a gain for me since I'm buying it. And this, if it increases, will be a loss because if you remember, I have taken a short position. Now, if I want to see all this analysis, I can directly see here that due to delta and due to delta and Vega factor, the 390 call option, if the price goes to 420, you can see here on a real time basis, it's changing. So I'm expecting the price to go to 420. Okay. 420 on 10th June. So if it goes to 420 here, due to delta and theta and vega factor combined, the expected premium is increased to 33. But 420 call, which I sold at 7 rupees, that will also increase to 14.65. Now, I can expect 19,620 by squaring of the position. What would happen in the screen is that if you go to the strategy watch here, currently it is -8. At that point of time, it will be showing close to +19. You can click on trade and the same premium, what you're seeing here, will be visible on the screen. That is 420, 420. When the price touches to 420, the premium would have jumped to 38 and 21, and you will get a gain of 1 second. We have to change it. Okay, that would be premium would jump to 34 and 15. Remember, if the price goes up tomorrow itself, then 420 call would jump to 20 rupees because the theta decay would be lower. But if it goes up on 10th June, then it would only jump to 15. The premium would increase to 15 because the theta decay would have happened. Okay, so in a simple layman term, today you are paying 19 and today you are paying rupees 8, and if the share price touches 420, okay, if it touches 420, let me just type it. That's the easiest way. Okay, so if the touches to 420, then you can expect the net premium to go to 19. So as a result, you will make a gain of 19,350. So you paid 8, that is -8 equals to paid, and you will be collecting 19 that will be received. So your net gain would be 11 into 1,800. So 19,800 would be your net gain. Close to 19,800 would be, okay, it's 19.5. I need to say, even the decimal makes a lot of difference here. So 19.05, and you paid here, currently you're paying 8.3. Okay, so on a real time basis, the premium keeps changing. So you would make 19.05. So you're making around 19,350 as a gain. Remember, all these numbers keeps changing. So when you execute the trade, whatever the net premium that you're paying, that premium will be applicable. And then when you reverse the position, that is when you square off your position, whatever the premium that you collect here and whatever the premium that you have to pay here, that would be your net gain. Okay, so there are a lot of features in the next option. So we will be doing multiple series on it. Do watch us, do support, do join our WhatsApp channel. So we will be keep releasing new features how it can help you. So for the Exide Industries to go up, for the strategy to work, we would expect the Exide Industries to go up to 425 level. If not, you will incur a loss. Thank you.